I'm Doris. I'm here to share with you about my stock account. Today, my stock account has earned $3,770. The rising mixed Treasury yields were weighed on technology stocks. So first, let's take a look at my account. Today, SQQQ made a gain of 5.16% to $22.82. Today, the total gain from SQQQ is 3,500. And today, the net asset of my account rose to 77,517.44. Today, the industry closed downward, with the tech stocks leading the loss. Dow Jones Industrial Average closed up 0.27%, Nasdaq Composite closed down 1.29%, and S&P 500 closed down 0.38%. Today, the internet content and information closed down 3.53%, which drove a gain to SQQQ. At the same time, internet retail and software industry also closed down by more than 3%. Wall Street closed mixed on Wednesday. Rising Treasury yields weighed on tech stocks. The Fed holds its monetary meeting next week, and investors mostly expect the bank to pause in June and then for the last time in July. The U.S. trade deficit continued to widen in April. The Fed will hold its monetary meeting on June 13th to 14th. Investors are watching closely whether the Fed will stop raising interest rates from this meeting. Fed officials are now in the period of silence before the meeting. The Treasury market expects the probability of a Fed rate hike by July to reach another 100%, which is expected to be the last move this year. The move comes after several Fed officials said the Fed will skip raising interest rates in June. The June contract price also showed that traders tend to think the Fed will pause one rate hike this month. Treasury prices fell, with the 2 and 5-year yields up at least 11 basis points. The swap rate linked to July session climbed up to 5.33% on Wednesday, 25 basis points above the current 5.08% level. The energy sector rose 2.6% today, becoming the best performing of the 11 sectors in the S&P 500. Regional banking played continued to rebound. PacWest up 14.4%, while the SPDR S&P Banking ETF KRE rose 3.3%. The U.S. stock market earnings session draw to a close. Dave & Buster Stitch Fix shares higher after earnings. U.S. stocks recently got a boost as the AI boom drive tech stocks higher. Over the past 3 months, the S&P 500 has gained more than 7%. But Bob Dahl, Chief Investment Officer at Crossmark Global Investment, warned that despite the recent market climb, it will be hit more often in the future by the Fed's rate hike. He noted the leading economic indicator index of the U.S. has fallen by 3 consecutive months, and we still face an inverted yield curve and liquidity problems. KMM's financial chief executive said, U.S. stocks may not be very volatile in the near term as investors prepare for the next week's Fed policy meeting. Goldman Sachs cut the probability of a U.S. recession from to 25% from 35%. Citing the easing pressure on the banking sector and the agreement to suspend the debt ceiling. The bank also forecasts that the U.S. economy will grow by 1.8% in 2023. The OECD forecasts global GDP growth of 2.7% in April, and the U.S. GDP growth of 1.6% in 2023, and China's GDP growth of 5.24% in 2023. OECD expects the federal funds rate to peak at 5.25% to 5.5% in the second quarter of 2023, with 2 moderate rate cuts in the second half of 2024. Economic data on Wednesday shows the U.S. trade deficit continued to widen in April, but slightly below economists expected. A rising trade deficit could mean slower GDP growth in the second quarter. The U.S. trade deficit rose 23% in April to $74.6 billion in April, the Commerce Department said on Wednesday. Trade imports rose 1.5% month-on-month to $323.6 billion, while exports fell 3.6% month-on-month to $249 billion. The market were revised and shows that the trade deficit narrowed to $60.6 billion, rather than previously reported $64.2 billion. The trade did not contribute anything to the 1.3 annualized economic growth rate in the first quarter, after 3 consecutive quarters of gross domestic product growth. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.